So I think overall, it's a healthy cleanup. Traders, short-term traders, people using leverage, and people who wanted to take profits are out now. And I think that clears the air for Bitcoin to go higher.
For more in the markets action, let's bring in Juan Leon, crypto research analyst at Bitwise. Juan, all eyes have been on Bitcoin this week, especially after it reached a highly anticipated new all-time high yesterday. And you're really a special guest because you're the first person on the show to comment on that and give us your reaction. But first of all, could you briefly summarize for our listeners what exactly happened yesterday? It seemed like such a wild day because, we did see quite a significant pullback right after the rally.
Yeah, of course. So yesterday we broke all-time highs, broke the 69,000 all-time highs marked in November of 2021. Then we immediately after that corrected down 12%. And now today we're back up to 66,500. So it's been a roller coaster ride. And I think what's been happening is, Bitcoin had its IPO moment when the ETFs launched in January. And since then, there has been a progressive acceleration in the dynamics, creating an acute demand supply imbalance. And what I mean by that is that coming into the ETF launches, we were already seeing 70% of the outstanding supply that hadn't moved in over a year, meaning there was only about 30% of the float available for trading. That has continued to remain the case. But then on top of that, the ETFs launched and in January saw 1.5 billion in net inflows, meaning that they bought about 30,000 Bitcoin while less than 20,000 Bitcoin were produced. So in January, Bitcoin ETFs bought 1.5 times the new supply produced. Then, however, that accelerated in February as the ETFs took in 6 billion in net inflows, meaning they bought around 114,000 Bitcoin while only 26,000 new Bitcoin were produced. So we're talking that in February, Bitcoin ETFs bought more than 4 times the new supply produced. And so far in March, we are seeing that dynamic accelerate further. Yesterday, the ETFs bought 10 times the new supply produced. So now that insatiable demand by the Bitcoin ETFs is also colliding with FOMO of missing out on getting in ahead of the Bitcoin halving in April by market participants, where there could be a further demand squeeze. So many people are trying to front run that now. And that combination in tandem with increased leverage led to the pop to all-time highs.
Just briefly, Juan, are you worried about a supply shock?
No, what's going to happen in the halving is that the supply will get reduced by half. New issuance will get reduced by half. So there will be a shortening of supply. And I think that will exacerbate this dynamic even more, where demand is really strong, supply is really tight. And I think that is very constructive for prices to continue to rise.
So the supply issue is certainly one thing that differentiates this week's rally with what we saw in 2021 when Bitcoin hit an all-time high previously. And I think we can agree that this does feel sort of like a flashback to that month in November when Bitcoin reached 69,000. But how is this time around different from that previous peak as we see more institutional investors versus less retail investors? What do you make of that?
Yeah, absolutely. You're right on. Last time around in the last cycle, it was a retail-driven cycle. But institutions had very little access to Bitcoin. You could access it through private trust, but for most professional investors, the vehicles that were around then are not compliant with what their investment committees need to be able to allocate. Now, this time around, the Bitcoin ETFs, as I mentioned, that is really Bitcoin's IPO moment. It institutionalizes Bitcoin and opens it up to the masses, both individuals and institutions alike. And so now the ETF wrapper, that gives Bitcoin the stamp of approval that compliance departments at investment firms of all types, from RIAs, family offices, hedge funds, to other institutional investors, can now start allocating. We run an annual survey, and in our last survey of professional investors that we ran in December, 88% responded saying that they were waiting for the Bitcoin ETF in order to allocate to Bitcoin. So that's what we're seeing different this time around. It's institutional investors, a wave of institutional capital starting to allocate to Bitcoin.
I want to briefly go back to the pullback that we saw yesterday, which was quite significant. Was this the correction that people have been waiting for, or do you expect more downside in the next couple of days or weeks? And when we see a pullback like that, who are the investors that are selling? Is it the institutions that have automated sell orders, or is it retail investors who are getting excited? Do you have any insights into that?
Yeah, it's a mix. So while Bitcoin's price has benefited from the vast inflows to the ETFs, the sell-off was driven by a mix of profit taking and liquidations from the leverage. So I think overall it's a healthy cleanup. Traders, short-term traders, people using leverage, and people who wanted to take profits are out now. And I think that clears the air for Bitcoin to go higher. We may retest the 69,000 highs once or twice more. But I think eventually we go higher.
So Juan, pivoting to ETH here for a second, which similar to Bitcoin has skyrocketed since the start of the year, crossing the 3,800 mark earlier this morning. CoinDesk indices has the all-time high for ETH at about $4,800. When do you expect ETH to break above that and reach new highs?
Yeah, it's still currently a little over 20% below its all-time highs. I think it's been largely overshadowed this year by Bitcoin. Bitcoin has sucked up all the air, all the attention, and the spotlight with the Bitcoin ETFs launching. But I think it has at least two major catalysts that will come into more focus. One of them is the Denkin upgrade, which is happening in mid-March. And even though it's coming up soon, I think the positive sentiment towards that will happen after in the maybe weeks or months after the upgrade, as the effects take place. And what's going to happen with Denkin is that the Denkin upgrade is going to allow fees on the L2s on Ethereum to drop to below a penny, and that I think will allow transaction activity to really pick up and mainstream consumer demand to really pick up. So once you start seeing that activity, those fees drop and activity pick up, I think that will be a positive sentiment catalyst for ETH. And then the other thing is the spot ETF applications that the deadline that everyone's watching is at the end of May. And so as we get nearer, and depending on how the conversations with the SEC evolve, that could bring excitement into Ethereum as well. I think the odds of approval for those ETFs this year are not as clear and as high as they were for the Bitcoin ETFs. I think it's somewhere in the, I give it a 50-60% chance that they get approved in May. But I think it will bring positive sentiment. And I think either way, sooner or later, those ETFs get approved as well.
Do you have a price target for ETH for this year?
I think it could very well go above 8,000 into 10,000, maybe even higher. But I think it could certainly hit 10,000.
Wow, that's almost twice as much as the last all-time high we saw. That's impressive. Just lastly, what else is sticking out to you today that traders should be aware of?
I think another one to watch is Coinbase. It is the super app of crypto, and that means it provides exposure to virtually all corners of the industry. With Coinbase, you get exposure not just to crypto trading volumes, but also to the growth in stablecoins via their partnership with USDC, their growth in layer 2 scaling solutions via their protocol Base. They are the custodian to 8 of the Bitcoin ETFs. You even get venture capital exposure through their venture portfolio, which has invested in more than 400 crypto startups, some of which are becoming some of the established names in the industry. So I think that's a phenomenal company, and it has a lot of room to run in this bull cycle.
All right, thanks for coming on, Juan. That was Juan Leon, crypto research analyst at Bitwise. That's it for today's show.